I'm Michael Fox, and this is the Prospector News Podcast. And joining me, I have the gold advisor, Jeff Clark. Welcome, Jeff.
Hey, it's great to be here, Mike. I haven't been on your podcast before, so I'm glad to be here.
Yeah, this has been a long time coming. You and I have talked about having you on now for several months, and it was good to see you down in Las Vegas at the Silver Symposium, and we were able to finally tee this up to get you on side. Now, that was an interesting conference, wasn't it, Jeff? Everyone talks about how bad the markets are, but there were 1,000 paid investors at that show. They showed up on Friday night for the opening events and discussions. And I tell you, most of them were still there Sunday night when we were rolling up the carpet and people were starting to go home. Most of the people were still there and they were engaged.
It was a great conference. I have to be honest, I was pleasantly surprised at just how many people were there. Now, there was some crypto stuff there too, so it was kind of crypto silver. But people were really engaged. That everything about silver was well attended. It was a very informative conference, in my opinion. Very helpful to people, but it shows that sentiment in silver it's not dead. That's for sure. And maybe a lot of those are silver bugs. But it does show that sentiment is maybe better than some people think.
Yeah, I would agree with that. It's interesting when you create a pocket of interest. Everybody shows up for it, but if you're dealing with the overall general markets, yeah, it's been quite dismal, and quite frankly, it's been a challenge for companies to raise money and get the investors interested, which leads us to today's topic, which is stock picking in these kinds of markets. For me, this is the money making time for me. I look at this as if I pick properly, I'm going to get outsized gains because everything's been beaten down pretty rapidly. Am I right? Am I wrong? Or
Oh,
have I bought I drank the Kool-Aid of the silver bugs?
well, it's not just silver, it's gold too that, has been the gold mining stocks have been completely beaten up. Some are down, 75% of the better companies are down even that much, basically on nothing wrong with them. It's just sentiment and people wanting to exit the industry. And you hit on a good point. This is when you make your money. And like Rick Rule says, I make my money in bear markets. I just cash the check in bull markets. So I'm quite sure that he and many other big names that we all follow are taking advantage of all this, especially the really good companies that have sold off dramatically for no reason and are completely oversold. So you're absolutely right, Mike.
One of the things that investors that are in the space, they have to refrain from is actually looking at the day-to-day almost fluctuations of their stock, because that, quite frankly, it'll make you dizzy and give you ulcers.
That's for sure. I got to be honest, I didn't expect this. I didn't think we were going to see this kind of weakness in the gold stocks. Not just weakness, this kind of waterfall sell-off. I mean, it's been a sentiment summer. It's been a big sell-off. And I didn't expect that, I'll be honest. So, but we're investors and we have to take what we're given. And what we're being given right now is a big gift on a gold platter and a silver platter. Now, I know a lot of people have been long for a while. I've been long for a while. But I think given what's happened and given sentiment, you really have to go with the stronger companies. This is actually turning into a stock pickers market because, all boats rise when we get a rebound and that sort of thing. But some are definitely going to outperform others, and some are not going to perform at all. So as painful as it might be, you do have to dump those stocks that are really weak in your portfolio, and I don't mean the stock price, I mean company developments. If they don't have material progress, if they don't have cash, if they're not able to move their companies forward in a significant and meaningful way, they got to go. That's what I think. So I think the sentiment is the big factor, but some companies will do better than others, significantly better than others when this does rebound. One way to do this, Mike, what I tell people is look at your mining portfolio. And what if I told you that you had to cut it in half? If you had to cut it in half and you had to eliminate half the stocks you own, that exercise can really help you identify who the stronger stocks are. And you may not know all the details of every stock, but going through that exercise really helps you pinpoint what is a good mining stock. What are the ones that are most likely to rebound when gold and silver and when sentiment turns around? Because it will. Historically, we know it's going to turn around at some point. But I think going through that exercise, and I'm not telling you to cut half, I'm saying just go through the mental exercise of that, and it'll really help you identify, which ones are the strongest in your portfolio. And it helps you really, kind of materialize in your mind what a good mining stock is and what you need to look for. So I think that can be helpful.
Yeah, it's an exercise that one should do with their portfolio on a regular basis. It helps you look at things with a pragmatic viewpoint as opposed to looking at it in that, I love this stock, I love that stock. It's easy to fall in love with stocks and stories, but are they actually able to deliver on the story that you fell in love with? And that's a key. And yeah, I agree. This will eventually turn around. As I've shared with a lot of people, I feel like I'm in that play waiting for Godot, waiting for it to turn around. But unlike the play, I do know the guy's going to show up.
Very good. Excellent.
So after you've done that exercise, now you want to decide, looking at the broad strokes of the stocks that are out there, how do you go about picking what you think are going to be winners when the upturn begins?
That's a great question. There's three questions I always ask, especially now. So for the current time period we're in, and we should probably even ask, should you even buy mining stocks right now? So the first question is, to answer that is, well, what is gold doing? Silver's weak, but what is gold doing? Has gold fallen down to $1,500 an ounce? Some of these companies are being valued as if gold is, $1,200 an ounce. Gold has not done any of that. Gold is holding up. In fact, gold is up year to date, just a small amount, but it's actually holding up very, very well in this environment. And if you look at the 5-year chart of gold, gold's up substantially. So gold has not dramatically fallen to where that would explain why junior stocks especially are so sold off and so dramatically down. Gold's up. It's the stocks that are down only. So we have a hint that, okay, this market is okay because gold is up. The second question I ask is, okay, if gold's up, are miners undervalued or overvalued relative to the gold price? So there are times in history where the miners, especially the juniors, are overvalued relative to the gold price. Sometimes they're fairly valued, sometimes they're undervalued. And then we have what we have now. That's, dramatically oversold. We have an extreme undervaluation with the juniors. In fact, Crescat Capital did a chart and show just how much the explorers are undervalued. They would have to rise on the venture index, the Canadian index. They would have to rise 475% just to get back to the 2007 high, which would match where the gold price is. In other words, they would be fairly valued if they rose 475%, from their current levels. This is the explorers and the juniors. But my question is, what happens when gold moves higher? What happens when silver moves higher? What if they really go into a run? That means the appreciation on them would have to be even greater than 475%. And here's the thing, these things always overshoot. They've overshot to the downside. So it would not be unreasonable to expect them to overshoot to the upside. So to be honest, Mike, I know it sounds crazy, but I think a 10x in some of the better companies from their current levels is actually reasonable to, think could occur. That's how dramatically undervalued they are. And then the third question I ask is, specific to the companies themselves, and do they have the two C's? They have to have cash and catalyst. They have to have the cash. Some companies can't raise money right now. So if the company is struggling to raise money, can't raise money, or just is not raising money, and yes, that is dilution, but they have to have the cash to push their companies forward, and they have to have the catalysts. They have to have developments that are underway or that are already happening. They have to have material movement in the development of their projects, not just little things, not just news. They have to have material or significant catalysts. If they don't have that in place, then that's not a stock that I see bouncing strongly when gold and silver reverse. That's a stock that I might consider selling, or at least selling half or something like that. So those are the three things that I look at. And I will say, Mike, I'm buying now very selectively, but I'm buying additional tranches of certain stocks. I disclose that on my website right now. So I just bought another one this morning. So I'm trying to take advantage of this and position myself for what I think could be not just a reversal, but a big shift that dramatically impacts junior mining stock prices.
I agree. I look at my own portfolio, and I haven't gone through the exercise of what if I had to dump half of this, which that's very good advice, and I'm going to take you up on that and review my stuff in that fashion. But where I'm at today, now I've been long metals for the last couple of years on this, and yeah, I was up there for quite a while, and then we've had this long drawn out correction here that's occurred here in the last 18-24 months. As I say, we're waiting for Godot, where it's been choppy, markets on the way down to where they are at their lows right now. But if I were to hold everything right now to where I believe that the stock valuation should be, my portfolio grows 7 times. And now,
congratulations.
Yeah, it would be, that's from today's pricing. Now, I wish I bought some of these at today's pricing. But, from a lot of the purchase points that I have, I'm still going to, like we talked about, to get to the mean of where they were, I'm looking somewhere between 4 and 5 times value, which is where the market says that they have to go to get to where they would be valued, given where gold was, back then, right, versus where it is now. And as I say, I've left money on the table by being long early, but I've picked what I think are winners, but I'm also not adverse to tossing stuff out if the story has changed and it's no longer appealing either. And I guess that's, not only do you have to pick winners, but you also have to decide when those winners aren't going to be winners too, right?
Yeah, yeah, exactly. Yeah. You have to do that exercise regardless of the market we're in. It's just that it's more important now, and you may do more trimming now, and you may buy or even average down on, if you already own it, some stocks that are the strongest. I mean, that's what I'm trying to do. But I'm also, picking some new stories. I'm looking at new stories that are starting at that point. So, all of this can really be an advantage to us, Mike. It sounds strange to say, but someday we're all going to look back and look at, wow, look, that stock XYZ was, look how cheap it was back then. Boy, I wish we would have bought back then. I think we're going to be saying that in a year or two. So, and again, I'm not just saying that because, I love gold or I'm really long mining stocks. I'm saying that because history tells me that these things, always reverse, and they usually overshoot when they're coming from such an oversold condition. So, hey, I think there's going to be exciting days ahead. You have to hold on here.
Yeah, no, definitely. And it's, I laugh the way you say that, because I think, because there were Bitcoiners at the conference we were at, I first heard of Bitcoin and it was trading for $7. And,
Oh, wow.
I poo-pooed it as a concept, but, and I'm definitely not a Bitcoin bug. Haven't invested in it. Probably never will, but hindsight, do I wish? Oh, you better believe I wish at $7 a coin. I had bought a few hundred coins.
Yeah, right.
But
Right.
then again, we wouldn't be having this conversation because I'd be well retired by that point.
Right. Right. Well, I think some of the juniors, they're not going to go from $7 to 16,000, or no, $66,000. I think the top was. But we're going to see easy doubles and triples. We're going to see, a 5x in the stronger companies. We're going to see a 10x in, those that make a big discovery. And just like the last cycle, there's going to be a handful that go 20x, 50x. I mean, it's going to happen, so I think that's what we have to look forward to.
Yeah, I'd agree. Now, you talk about those 3 points when you're picking the stocks. Of those three, what's the most important point that you look for when you are picking a stock?
Well, I think you take them in order. The first question is, what's gold doing? Because if gold was $1,500 and falling, this is, perhaps not a good market to be buying stocks in. You want to wait till it stabilizes and starts up again, but it's not. So we have the all clear from gold that we can look at mining stocks. And then the second thing is just how undervalued they are. They're so undervalued. I mean, it's kind of crazy just how oversold they are. This is, Mike, remember the nuclear 90s? Some miners called it that because they couldn't make any money. The gold and silver were doing nothing. They were flat to down. Companies' earnings were they couldn't make any money. So we have a period like that now, and some are saying, look, this is actually worse than the nuclear 90s. And they ask the question, is this a 100-year opportunity? I mean, that's a pretty bold question, but if it's worse than the nuclear 90s, we have probably at least a 50-year, opportunity here. So, and then we know they're undervalued. So we have the all clear to start looking at mining stocks. And then the third question is, you got to be picky about which ones you go for. Again, they have to have the 2 C's, but that's kind of the process I go for. And my answer is yes, I can proceed buying them. And now I'm looking at the ones that, pass my criteria.
Yeah. When I look at individual stocks, I treat it like a racetrack in a lot of ways. So I'm always jockey, horse, track. So jockey, that's the management team. Have they had success? Have they basically ridden winners in the past? The horse, is it a good project? Are they, does it have the makings of being a valuable a valuable find, and could it possibly be a mine at some point in juncture? And then track, that's the jurisdiction. Is it a favorable mining jurisdiction, or am I going to wake up worrying one morning that the government's come and seize my mine?
Yeah.
So those are my criteria in selecting individual stocks.
I
Um,
like that, Mike. That's very good. That's
um,
useful.
and that's kind of the way that I kind of look and position myself. Is it a similar process with you, or is one of those more important than others? Like, for example, if it's me, um, I'm always looking at the jockey first, because they're
Oh
likely
yeah.
not going to ride a bad horse.
Right.
But if it's a really good project, and the management maybe not, um, there's opportunity that, given new management coming in, that you can also start to see that. So sometimes the horse will outweigh the jockey in some cases, but ideally, I'm looking for the trifecta. I'm looking for all three of those things, but I'll take two out of the three, but I'll never go in what I consider to be a poor jurisdiction.
Yeah, you're exactly right, Mike. You have to look at the three legs of the stool, people, projects, and politics. That's how I do it. And when someone asks me about a a stock and I'm not familiar with it, the first question I ask is, okay, where is it and who's behind it? Because if it's in some war-torn part of Africa, I'm sorry, I'm out. That's a non-starter for me. And then I look at the people. Now, they can be young. I own a couple stocks where the management is young and doesn't have a lot of experience, but they're backed by a technical team and a VP of exploration and advisors that are highly experienced and been very successful. So, that would pass muster for me if they have that. If they don't, then I'm not going to buy, even if it's in a strong, jurisdiction. And then of course the project, it has to be highly prospective. So I go into some detail on that on the website and in my book, but that's the starting point. And if you just use those three criteria, you'll really be much better off. You'll have some of the stronger companies in your portfolio.
Yeah, and ask questions. One of the pieces of advice I like to give investors all the time is pick up the phone, call the CEO. If he doesn't call you, or she doesn't call you back, or somebody from the company doesn't call you back in a timely basis, you might probably want to, take a look at a different company.
That's a very good point, and I encourage everyone to do that. Just keep in mind, if you're calling juniors, and the CEO is a geologist, he's probably going to be out in the field in the summer. So, but yes, they should get back to you, and if they don't, that's unless they've got a very good explanation for why they don't. Yeah, that doesn't pass muster.
Yeah. But also, when you call, if you have to leave a message, which is sometimes what you have to do, be specific as to why you're calling, because these guys get solicitation calls all the time. And the last thing you want is for them to think you're just someone soliciting them for business, and they blow you off. So make it clear that you're an investor with investor questions.
Yeah, absolutely. Yeah. And sometimes you might get the investor relations person, which can be fine. But yeah, asking very specific questions, having those prepared ahead of time is good advice.
Yeah, definitely. And, make sure you like the answers too.
Well, of course, yeah, that's why you're calling, right?
Yeah. Or say, I was always taught growing up, never ask questions you really don't want to know the answer to.
Right.
So you and I are going to see each other again soon. We're both going to be down in New Orleans at the New Orleans Investor Conference that Brian London's putting on. I'm looking forward to that. There's stock picking opportunities down there too, isn't there?
Yeah, there'll be stock picking opportunities, definitely, perhaps even more than we saw at the Silver Symposium. So a good place to meet lots of companies. I'm looking forward to that very much. That can be very valuable. But that conference also has some really big name speakers this year. I mean, Brian really captured a lot of big names people to come in and talk. So uh, this is going to be a very good macro conference in addition to lots of gold talk. So I'm really looking forward to it.
I am as well. Yes, Brian. Brian brings in a lot of experts from a lot of different fields, and you talk about where's gold and what's the macro position. You're going to get a lot of advice from people that understand those macro positions at this conference. So, it's a good way for you to start off that particular journey through those three questions as you outlined.
Yeah, absolutely, definitely. So it should be fun. It's always a fun time, and I think it's 4 days, so plenty of time to absorb lots of things. I'll have a workshop myself there talking about juniors too.
Perfect. You guys that are out there can make it down there. You should sign up and be sure to follow Jeff in his workshop, and you can start to ask him more poignant questions about how he stock picks, and he might even give you some advice on a few of his picks.
Oh, definitely. Yeah, I'll have picks there and some recommendations on how to do all this. And then since it's a workshop and there's nobody after me, it's actually in an evening. We'll probably do some Q&A too. Just sit around and chat and try to help people as much as I can.
Oh, those are absolutely the best. I don't have any formal presentations. I just wander around like a homeless person. But I do have a table in media row, and people are more than welcome to come up and ask me anything they want. I'll either give them an answer or I'll tell them I don't know, and tell them who might have the answer for them if I do know that. So
Yeah,
um,
yeah, great.
now, lastly, your book is finally out.
Yeah, the book Pay Dirt has been out, all this year. But it's only been available on my website as a downloadable PDF, which some people like, but some people have been waiting for it to be, in an ebook or in physical form. So I'm happy to say that now it is available in ebook form, so you can order it on Kindle and Apple and all those. In fact, on the website, where the book is located in the tab there at the top, you can see all the different links there where it's available to buy in ebook form. The physical book is coming. I was really hoping it would be available for New Orleans. I don't know if we'll make it, but dealing with a private publisher has been a little more tedious and complicated and longer than I thought. And it was complicated by my back surgery too. But it's coming. I don't have an ETA, but it's definitely coming in physical form. And if you want it in ebook form, well, you can see the link on the site.
Perfect. I suppose you could take orders for the book in New Orleans if people really want it and can be patient for the hard copy to come.
Yeah, I actually have a business card that has the code, the QR code on it. You can just ping it and download the book right there.
Perfect. Look forward to seeing you down in New Orleans. And if investors who can't make it down there want to follow you and learn about what it is that you do, how would they do so?
Well, everything I do now is on thegoldadvisor.com. That's our site. It's gotten very busy. It's doing so well. I actually had to hire another analyst part-time already. So, but you can see everything I do on that website, from our stock picks to the book to just why you should own gold, everything like that. To view the portfolio itself, the stock picks themselves, you do have to create login credentials. It's still free. Everything's free, but you do have to create login credentials. We don't, sell your email or spam or anything like that at all, of course. And you even have a choice of frequency and how often you want to receive the newsletter. But yeah, everything's there.
That's a beautiful thing. I look forward to seeing you down in New Orleans, and we'll pick up and do another one of these down there.
That'd be great, Mike. I loved it. So yeah, look forward to seeing you there. It should be great.
Perfect. Thanks very much for joining me today, Jeff.
Thank you, Mike.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.